Hi.
Hi.
Hello.
Thank you guys so much for joining us. I'm your realtor, Carla, and today joining with me is Renee Komondy. She's with MVB Mortgage. Thank you so much for being here today.
Thank you. Thank you for having me. I think this is a great opportunity to go and explain about loan programs and the availability of being able to buy a home today.
Wonderful. Well, thank you so much. So we have a couple of questions for her, especially if you're a first-time home buyer or you're just wondering where to start. She has a lot of answers for us today. So would you please tell us a little bit about what you do?
So I'm a loan officer. I've been originating loans over 25 years, and my job is to qualify clients, borrowers accurately so that I put them in the right price range and most importantly, the right loan program. In today's world, in my mortgage banking world, there are a lot of loan programs available for people. There's no money down, there's little money down, then there's the regular 20% down. So people need to know you do not have to have 20% down. I have some great products that only allow 3% down and even 100% financing.
Wow, those are great programs. So if we could just kind of break those down a little bit, we might be familiar with some. Would you mind starting with the conventional? You mentioned 20%, we don't need it, but can we just go over it anyway because that's
right.
Thank you so much.
So conventional financing, that's where lenders will sell their loans to Fannie Mae, Freddie Mac, and they are the ones that determine regulations and guidelines for us lenders to qualify borrowers. With conventional financing, if you do put 20% down, there's no private mortgage insurance, but you don't have to put 20% down. I have a product with just 3% down that you can purchase a home, and the interest rates now are in their low threes. It's a great time to buy. These rates are just a window of time because rates do fluctuate. It's based upon the 10-year note bond market, and we are back in the low to mid threes, which makes a huge difference in calculating a mortgage payment.
Okay, and you came in earlier and we were talking and she gave me an example. So you were saying that a couple just bought a townhome, and what was their interest rate before? About 4 point?
A couple bought a townhome in January. Interest rate at that time, rates started to change, was 4.75, which again, great rate.
Yeah, definitely.
Let's fast forward 8 months later, and the rates are down now to the low threes. They're refinancing with me, and they're saving $350 a month.
Every month, $350.
So this is a great time to look into buying. Many reasons. One, most importantly, are the lower interest rates. I like to believe they'll be here for a while, but it's always a window of time.
Wonderful. Thank you so much. That's very important and informative. So you mentioned an FHA loan. Could you explain to us what that is?
FHA, which is backed by HUD, is really for a first-time home buyer, but you can be a repeat user, meaning you have owned a home in the past, but it's 3.5% down. The loan amount goes up to $726,525 in this high cost area. So you could buy a home for around $750,000 with 3.5% down.
Wow.
Of course, you have to qualify, be careful, and be comfortable with the payment, but that's the availability we have in this high cost area, is that Fannie Mae, Freddie Mac, FHA, VA will go up to a loan amount of $726,525. Obviously, you can go above that loan amount, but that's what we call jumbo money.
Okay.
So that's still available, and that's where it does require more down payment.
Okay, wonderful. Thank you. And then there's multiple different programs with what you were talking about.
Yes.
But one that's very common for our service members is the VA loan. Can
Veterans, yes.
Thank you.
VA offers this for active duty, retired, National Guard, reserves, where you can buy a home, no money down, up to $726,525 loan amount in this high cost area. Not only can you go no money down with no monthly mortgage insurance, and the rates are in the low threes. Just locked in a loan at 3.125. VA does charge a funding fee, but you finance that on your base loan amount. And if you are a veteran, you have 10% or more disability, the funding fee is waived.
Oh, wow.
So it's a great loan program for our service members, and low rates and no money down.
That's wonderful. That's a great benefit, because we're also thankful for all of our service members out there.
Absolutely. And you know, that is our gratitude, and that's one way of thanking them, is providing a program through VA with no money down and no mortgage insurance, no monthly mortgage insurance, like regular programs would provide.
Wonderful. Thank you. So my next thing to ask is, if somebody needs help with one of these, how could they go forward with it?
It's very important to reach out to a loan officer with experience, knows all the loan programs available, and just the information needed is annual income, monthly debt, like a car note payment, credit card payment, student loan payment, and cash availability. All I would need is information. Just that information to determine a loan program, give them a payment, and let them know approximately how much cash is needed. Some of these programs, all you really need are closing costs. Closing costs is 2.5% of the sales price. Seller can pay it if they are willing. But so many loan programs out there, low interest rates, it's a good opportunity to look into buying a home.
Wonderful. Thank you. So whenever we're talking about mortgages, there's a couple of different kinds.
Correct.
Would you mind breaking those down for us? So just for example, a fixed rate versus an ARM.
Correct. Fixed rate, 30-year fix, 15-year fix, 20-year fix. The most popular is 30-year fix. Second after that is 15-year fix. That is when the interest rate is fixed and will remain the same for the term of the loan. You will sign a note stating interest rate is, in today's world, they say 3.5%, and the principal and interest will not change unless you pay off the loan. Adjustable rate mortgage is where it's fixed for a certain period of time, and then it adjusts to an adjustable rate mortgage annually thereafter. For example, a 5/1, 7/1 ARMs are fixed for 5 years, 7 years, and if you're still in the home in year 6 or 8, it will adjust based upon the 1-year T-bill, and there's a margin attached to the program to calculate new rates thereafter annually. I only recommend those programs if you're going to be in the property no longer than the fixed term, because if it adjusts, it can go higher, it can go a full 5% from the initial note rate.
Oh, wow. Okay, that's important to remember.
Correct. Now, the ARMs, the rates are usually a little bit lower than fixed rates. In today's world, not much, but there is a little bit of a difference. But again, the ARMs aren't as popular as the fixed rates because the rates are so low today.
Okay, awesome.
Yes.
Thank you. So in this particular area, in the DC metro area, Vienna, McLean, some young professionals are overwhelmed by the sticker price.
Right.
It was so great that you mentioned that these loans are available up to, I'm sorry, was it 700?
$726,525 in this high cost area. Again, you can go above that, it's just jumbo money. Okay. But yes, you would be surprised. I have a lot of clients who are buying homes and their mortgage payment is the same, if not lower, than their rent payment. Wow. So it's very important just to have a discussion of what their income is, monthly debt, and available cash. And sometimes people don't have available cash, but there are other options, gift money from relatives. I have a program where you can borrow as a second trust. So there are options.
Okay, awesome. Well, thank you so much.
You're welcome.
So my last question would just be, if someone didn't even know where to start, what would your advice be to them? What's the first thing they should do?
Talk to a loan officer.
Okay, great.
And get qualified. Because I look at my job giving my clients, borrowers, information so they can make decisions. I can give them mortgage payments based upon certain price ranges and approximate cash needed. And so I give the information for my clients to make decisions. And today is a great time to buy.
All right. Well, thank you so much for your
welcome.
time.
Thank you for having me.
Thank you. And thank you for bearing with us. There's a little construction going out on the road, but we appreciate it, and thank you so much.